Hello and welcome. You're watching Know Your Company on NDTV Profit with me, Soumit Sarkar. Today, the company on KYC that we are going to discuss is Prudent Corp. And in the next half an hour, I'll try to give you the most important information about this company. But firstly, let's try and understand what are we trying to understand on Prudent Corp today in the show. Firstly, if you look at the company had done a recent acquisition of the mutual fund distribution business of the Indus Capital. So what is the rationale behind this acquisition that the company has done? Is the deal EPS accretive? And what are the synergies? We'll try to get an answer for all that questions. Also, the company had recently achieved all the earlier given targets. So what is the next growth target that the company has internally set for itself is something that we would want to know from the management. Apart from that, what are the key levers that could lead to operating margin improvement going forward for Prudent Corp? And what is the anticipated growth when it comes to the insurance segment, which is the newly started segment of the company? So what is the kind of growth that they're anticipating from this segment going forward is also something that we would want to know, and how Prudent as a company is trying to mitigate the key risks that are present in the company. Firstly, when it comes to reduction of commissions, and the second key risk that comes on board for Prudent Corp at this moment is the fact that there's a big competition that is coming in from fintech. So how is the company mitigating this key risk is also something that we would want to know from Prudent Corp. But firstly, let's understand what does this company do. Now, this company was incorporated back in 2003. It provides wealth management services to retail investors. Now, Prudent is amongst the top few non-bank mutual fund distributors in terms of average AUM and commission that they have received. Now, as of June 2025, if you look at the company's average mutual fund AUM was close to 1.2 lakh crore rupees, with 96.7% of this coming from the equity-oriented schemes. Now, over the years, if you look at, along with growing its mutual fund distribution platform, Prudent has also forayed into the life and general insurance solutions, stockbroking services, SIP with insurance, gold accumulation plans, asset allocation, and trading platforms. So the company has tried to diversify its revenue sources as well. However, in the mutual fund business, if you look at, it has an open-ended source distribution of mutual fund products, where it distributes mutual funds of asset management companies irrespective of their affiliations or size, thus providing their clients a large spectrum to choose. Apart from that, in the insurance segment, it includes distribution of life insurance, which has term, par, non-par, annuity plans as well. And when it comes to general insurance business, it includes primarily health insurance business that the company sells. When it comes to the stockbroking services, it provides these services to retail customers to trade in equities, derivatives, and currencies. And when it comes to other financial products, it also provides PMS, AIF, P2P products, bonds, fixed deposits, small case, unlisted securities, and multi-other loan against securities as well, and sovereign gold bonds as well. So a very big portfolio that the company has. Now, if you look at the revenue model of the company, it's quite simple. It's commission based. The company earns recurring revenue from commissions that it earns on selling various products, and non-recurring revenue from brokerages as well. Now, as I was talking about the revenue mix, it has tried to diversify it, but 83% of the company's revenue still comes from mutual fund products. Insurance product, which is a newly started business in FY25, contributed around 12% to the top line. Stockbroking, again a very small contribution coming in, just at 3% and then the various other segments that we discussed, those segments contribute close to 2% to the company's top line. So that's all that we have about the company. Now, if you look at the key parameters on which we are going to rate Prudent Corp today, firstly, it's the income statement. The second one is the balance sheet that we are going to see for Prudent Corp. Now, how good the balance sheet is something that we are going to discuss here on the show. And then apart from that, we are going to also look at cash flows, return ratios, shareholding, how the share price performance has been so far from listing, and valuations, how to stand up at this current share prices, and what is the 12-month forward valuations as well. And lastly, we're also going to see how analysts are currently valuing Prudent Corp at the current juncture. So firstly, to start off with the income statement. If you look at the income statement, the company's revenue over the period, that is over FY22 to FY25, has grown at a compounded annual growth rate of 35%. EBITDA, similar growth of around 32%. Net profit, again a 35% growth rate. A quite stable growth that we have seen coming in from the company's financials. Now, if you look at the Q1 financial performance of Prudent Corp, the revenues on a sequential basis were higher 4%, but on a YOY basis, it was up 18%. EBITDA increased by 14%, while the net profit jump was around 17% on a YOY basis. So, a steady growth that we have been seeing that has come in from Prudent Corp so far. A 30% plus CAGR growth over the last 3 financial year, which is quite strong, and hence we are giving it a thumbs up at this moment. Even if you look at the margin trajectory over FY25 compared to FY24, if you look at the margins, it has increased to around 24.7%, but FY24 numbers had some kind of one-off, and that's the reason we had seen this kind of a depressed margin. But overall, the margins have remained quite stable at around the 25-24% band for Prudent Corp. Now, if you look at the balance sheet of Prudent Corp at this moment, it is a net cash balance sheet, which in itself is a plus point coming in for the company. The book value stands at around 6,680 crore rupees, and if you look at the mutual fund AUM, it has continuously grown over FY23 to FY25. The mutual fund AUM has grown from 56,189 to 1,03,515 crore rupees, which is a quite strong growth that we have seen. And as again I mentioned earlier, it is a net cash balance sheet that Prudent Corp currently has. In fact, they have as of Q1, they had cash of more than 500 crore rupees. So that's also a thumbs up coming in for Prudent Corp on the cash on the balance sheet side. Now, if you look at the cash flow from operations over FY23 to FY25 has increased from 127 crore to 161 crore. EBITDA has seen a jump of 173 to 262, which means that the cash flow from operations to EBITDA continues to remain above the 60% mark, which is very crucial for any company. And this clearly means that whatever income that the company is generating is largely cash. Nearly 60% of the EBITDA that the company generates is cash and is coming into the company's balance sheet. Again, cash flow is a thumbs up at this moment. For return ratios, the return on equity has been continuously increasing. In FY21, the company's return on equity stood at close to 28.7%, which has now increased to 34%. So a steady rise in the company's equity, given the fact that the company's earnings have been increasing. So again, a thumbs up coming in on that front. Now, if you look at the shareholding pattern here, the company's promoter holding from March 2023, yes, the promoter holding has come down from 58.4% to 55.3%, but it is not much of a dilution that we are seeing. Also, given the fact that FIs and DIs have taken a strong interest in the company. In fact, FI holding has increased from 1.2% to 17.5%, while the DI holding has increased from 9.8% to 20.8%. Domestic institution investor interest has nearly doubled when it comes to Prudent Corp, while if you look at the investor interest of foreign investors, it has quadrupled over the last 3 years. So strong FI and DI interest that we are seeing when it comes to Prudent Corp, and hence a thumbs up coming in for Prudent Corp as well on this front as well. Now, if you look at the share price performance, in the last 1 month, the share prices are up 5%, 6 month 48% return, YTD returns of around 10 odd %, and since listing, the share prices have increased nearly 430%. Again, a thumbs up on that front. However, if you look at the valuations, the 12-month forward valuation for Prudent Corp stands at around 47.7 times. This is a bit expensive when you compare with his other peers like Nuvama Wealth and 361, which are trading anywhere between 20 to 30 times. So largely on the valuation front, it's a thumbs down, given the fact that valuations are quite expensive at around 48 times. That is the 12-month forward valuation we are talking about. And lastly, when you look at the analyst recommendation, there are 3 buy ratings on the counter, 3 hold ratings, and the return potential over the next 12 months is largely flat, which means that the valuations are at full as per analysts. So hence we are giving it a neutral rating at this moment, given the fact that as per the consensus target price that has been set by around 6 analysts, the upside potential is quite limited when it comes to Prudent Corp. So to sum it up, if you look at income statement is a thumbs up, balance sheet is a thumbs up, cash flow is a thumbs up, that's 3 points, return ratio thumbs up 4 points, shareholding thumbs up 5 points, street cred again a thumbs up 6 points, valuations are thumbs down, and analyst recommendation is neutral, which means that the total rating for Prudent Corp comes at around 6.5 out of 8. Now let's go across to the management, the chairman and managing director of Prudent Corp, Mr. Sanjay Shah. Well, sir, thank you for giving us time. Firstly, to start off with, can you explain to us what is the rationale behind this recent acquisition that the company has done?
So, I think the acquisition of Indus Capital has been a very perfect fit for what we were looking for. So if I'll tell you, Indus is a company which has been there in the mutual fund distribution business for almost about more than 22 years, and they have roughly about 2,050 crore of mutual fund distribution AUM, which has been serviced to 3,500 families. So the average AUM per family would be roughly about 60 crore, 60 lakhs. So I think it's a very good fit for us because Prudent is also a pure mutual fund distribution play, and ours is 95% equity in 120,000 crore of AUM. In that case, also it's a 95% of equity AUM. So it was a good fit for us. As you are aware that Prudent is a very strong player in B2B space. However, Prudent started as a B2C. So today, if I am telling you I have 120,000 crore of AUM, roughly 10,000 crore of AUM we have from B2C, and we got something which is very quality in the B2C space. So we align the interest with the management of Indus.
Well, if you look at Indus Capital's AUM, it is grown at, it's around 2% of your quarterly average AUM. But the profit before tax margin, that stands around 70% as against 24% of Prudent Corp. So incrementally, what will this do to, what will this acquisition do to your business? What about your margins and profitability going forward? And with this acquisition, will you also have access to newer geographies, customers?
You are very true. So if you look at the currently Prudent is into a B2B business, and B2B is a business wherein you deal with all the independent, highly motivated, qualified mutual fund distributors, and there the it's a pure variable business, and whatever you earn, almost 67 to 70% kind of revenue you share with them, and your margin is roughly about 30%. While this is a B2C business wherein you will have the real estate managers who will be managing the customer's portfolio, and because they are your employees, you will be having the fixed plus variable remuneration payable to them, and then the payout normally is reasonably lower. Definitely Indus has a very good payout for their existing real estate manager. So there you have a very high margin. So you are very right. If you have a top line of 100 rupees in B2C, your margin would be about 70%. If you're into B2B, if you earn 100 rupees, your margin will be 30%. So I think it's a complementary business to each other. Coming to the my capability to work on their customer base, so Indus is a pure mutual fund distribution play, and they have established themselves as a strong player on the mutual fund distribution side. While Prudent is also dealing in the many other retail product like insurance, PMS, AIF, NPS, fixed deposits, even broking also. So we believe that we will be able to provide the additional services to Indus customers. So cross selling is going to be a very strong opportunity for us.
Right, sir. So with this acquisition, what is the kind of debt, employees, etc., that you will be taking as a part of this deal? And how long do you think the integration process between both these companies could take?
So we are acquiring it as a going concern. So whatever is the existing setup which they have in Pune, so they have the office, manpower, rented premises. So everything as it is, including entire manpower, will be on the books of Prudent. So I think we are acquiring as a going concern. From the point of view of their client, from the point of view of their real estate managers, there is no change as far as processes, approaches, and the activities are concerned. As if nothing has happened. Only thing is that the name will change from Indus to probably Prudent and Indus together. As far as the process is concerned, typically we have signed the term sheet with them, and the MV process is roughly about 15 to 20 days, wherein the letter has to go to all the customers saying that this process is happening, and their negative consent is required by them. If they do not agree, then they have to say that no, I'm not agreeing with this merger. So my belief is that by end of this month, entire Indus AUM should be in the code of Prudent by 30th September.
Right, sir. Now, if you look at this acquisition, this is entirely funded by cash, given the fact that you have a cash balance of more than 500 crore, right?
Yeah, absolutely. Because Prudent is sitting on roughly about 600 crore of cash, and current payout which we'll have is roughly about 85 crore, and this entire 600 crore is sitting on a liquid book. So yeah, we do not require any kind of money to be borrowed. Another thing is, when we are acquiring Indus also as a going concern, they do not have any kind of liability or debt or so it's a very clean business which we are acquiring without any liability or contingent liability.
Given that you will be left with a strong cash on the books, even post this acquisition, any more acquisitions that you're looking at?
Yeah, so I think with this acquisition, actually we wanted to give a very strong message to enter India's mutual fund distribution community that if you have built a very strong long-term assets, which is managed by a very strong team, and you have somebody who is managing entire show from the front, then we are definitely ready to align the interest with them because Prudent will be ready to absorb them. And I can tell you in case of Indus, because they have almost 15 to 17 very loyal relationship managers team, which is headed by a very strong industry veteran called Mr. Gaurav, who is handling this business. So it was a very good business where we can acquire and the business can also continue as it is. So if that kind of thing is available, we are sitting on cash and we are regularly exploring these opportunities. So we are definitely open.
Right. Now this acquisition, if you look at, it's coming at around 10 times price to earnings, while Prudent trades at more than 45, 47 times valuation. So this acquisition is happening at a much lower valuations. Why? And is this deal EPS accretive also?
If you look at us, independent mutual fund distributors who doesn't have the business continuity in place, and it is not supported by a big institution, I think the what we offered as a private PE multiple is a very reasonable PE multiple. It's not very high, it's not very low, and at the same price, deals are already happening in the market. May not be very large because ours is the largest all cash deal. Plus, Prudent is offering everything in form of cash. You might have seen some of the deals where it will be a equity swap of one company to another company. Well, it's a pure cash. So my belief is that it's a very reasonably priced deal for us, also for them also.
Right, sir. Now, if you look at earlier, you had aspired to achieve an SIP book of around 1,000 odd crore rupees. Now, you have already crossed that threshold. So, what's the next target internally that Prudent Corp has set for itself?
Yeah, so fortunately, we already crossed the 1,000 crore of SIP book in the month of June. And when I'm talking to you currently, we are at 1,062 crore. So that's a landmark achievement for us. And we celebrated very, very strongly this number because this 1,062 crore of SIP book we have 35 lakh live SIPs. And I can tell you about the Prudence market share in the SIP book. We are 3.7% in the total SIP book. And if you take out the direct piece, then Prudent is roughly about 6% in the SIP. So it's a very strong contribution to the industry, and we are very happy that we are participating into the India's retail financialization story.
Right, sir. And any internal targets that you have set for your on the market share front? Where do you see your market share to be, say, 3 years down the line?
Market share at in the regular piece about 5.6%, and gradually we want to take it towards 6%. However, internally we believe that today we have 1,060 crore. By March we should reach to a 1,200 crore of SIP, and in next 3 to 4 years time, rather 3 years from this year end, we should reach to a 2,500 crore. So that's the internally we feel that 2,500 crore is something which is achievable in 3 years post March.
Right, sir. When you look at the operating margins, it was a bit under pressure in the first quarter. But what is the outlook here, and do you see any levers for operating margins going forward?
So I think the operating margin, if you look at Prudent, as I think I explained you that Prudent is purely into a B2B space, and Prudent started the business in the B2C. So what has happened is that last 1 year, 1.5 year, our share of B2B, which is the partner-driven business, has gone up by almost about 200 basis point to 250 basis point. And as I told you, if 100 basis point incremental share comes from the B2B, my payout ratio to them would increase by 67 basis points. So there will be so that is the reason I think probably you will have seen that some amount of pressure came on operating margin side. Second, because of the competition, if you look at in the B2B space, there used to be only two players. However, in last couple of years, we have seen a lot of players entered into this segment. So we had some amount of cost pressure till last year, and that's the reason my employee cost has also gone up in the range of 18 to 20% in last 2 years. But probably my belief is that from the beginning of this year, we have been seeing that pressure is receding. And another important thing I can just wanted to communicate that we just got the approval for ESOP plan from exchanges, and in the next quarter, we will roll out the ESOP also, which is not a part of cost now. So probably next year, you might have one additional cost element of ESOP. But then after, we are very fairly under the assumption that operating margins should stabilize rather start improving from here on.
Right. And I clearly understand that insurance business is a newly started segment and it contributes around 10% to the top line. But the growth has been quite high on this counter. So how sustainable is this and what is the kind of incremental contribution that you're expecting from insurance segment to come in going forward?
Yeah, so I think we believe insurance is also like mutual fund where the penetration is very, very low. If you specifically look at the health insurance, we believe there is huge scope for expansion or the growth in this industry. If you look at Prudent, our we are basically a mutual fund distribution house. And what we are doing is that we have 34,000 mutual fund distributors who work with us and we try to convert them as a point of sales to distribute and advise the insurance product also. Out of 34,000, we could be able to convert almost about 12 to 13,000 people as a point of sales. But we believe that insurance is a huge growth ahead for us. And we are purely focusing as far as your general is concerned into our retail health. I'll just give you the numbers. March 23, my retail health book was about 100 crore. Currently, we are at 160 crore. And in next 1.5 years, we are targeting that 160 crore should go to us.
Right. The biggest risk that analysts usually point out is the AMCs given the fact that AMCs could cut commissions going forward. Any risk on that front that you could see going forward that could happen, which will keep your yields under pressure?
So if you look at, I think the entire industry has moved to a TR, new TR structure in 2019. And then after, because of a huge mark-to-market and the huge growth in the AUM, from last year, we have started seeing the repricing of current AUM by the couple of AMCs. If I give you the number perspective, let's take an example that in the first quarter, Prudent's AUM revenue was 300 crore. And if I can tell you that the projected impact of all the changes which are started by HDFC, then for example, Kotak, SBI or the Motilal, everybody, a lot of people has done the repricing of assets in their either all schemes or a couple of equity schemes. The cumulative impact is not going to be more than 15, 17 crores. So it's hardly about 1.5 basis point. That is what the impact is. However, we understand that as you see a more and more growth in the AUM at particular scheme level, some amount of pressure
Right, sir. Right, sir. And when it comes to fintech, that is the another key risk that is there for the company. So how is Prudent Corp trying to mitigate the same?
I think my belief is that fintech is probably helping to expand the market. Is probably why fintech has grown. I believe only significant reason the growth of fintech was the mutual fund distribution community is very, very less. Today, our country has 175,000 people who are working as a mutual fund distribution. So fleet on street is very, very less, and there was a huge gap, huge vacuum for people to invest. And I think that gap has been capitalized by the fintech player. However, the business model of fintech and the mutual fund distributors both are different. For fintech, they acquire the customer of a mutual fund through their acquisition route, and then they start offering them either the broking product or the NBFC, while the mutual fund distributors core revenue comes from the well-being and the wealth of their clients. So my belief is that fintech is growing but not growing at the cost of MFD.
Right.
And when
Right,
the
sir.
customer on the platform will grow to a size,
Right.
he will definitely need an advisor some point of time.
Right.
So normally we tell our business associates and the partners that when it comes to a fintech, please make sure that our tech offering,
Right, sir. Right. Well, thank you, sir. Thank you for joining us and explaining your company in detail. Well, that was the management of Prudent Corp. Well, with that, it's a wrap on this edition of KYC. Stay tuned and keep watching NDTV Profit.